Have you ever wondered why people say don't keep money idle at home, invest it? Why do governments and financial experts insight on the stock market? Today I will explain in the simplest way how the stock market helps you, me and the entire economy grow. By the end of this video, you will understand exactly why investing is not just about making money but about building the future. Role of the stock market in everyday life. Let's start with a simple example. Every one of us has a source of income, maybe a salary from a job, maybe profits from a small or medium businesses. From this income, we first pay for our living expenses. But after spending, we have left with something, our savings. Here is the question, what do you do with your savings? Most people just keep it at home or in a simple bank account. But from a financial standpoint, this is not the best use of your capital. Why? For individuals, cash saving doesn't generate good returns for future security. Idle cash is a lost opportunity. It cannot earn money on its own. Inflation reduces its value over time. For the economy, companies need funds to grow. Idle cash at home doesn't help the economy. Money invested in companies leads to grow from the economy, and also gives you returns. So instead of keeping cash idle, invest it back into the economy through instruments like the stock market benefits both you and society. Investing options for retail investors. Now you may ask, how do I invest my savings? There are several ways for a retail investor, a non-professional individual like you and me. Gold, traditionally popular but gives low returns, has strong cost, money stays locked, not invested back into the economy. Fixed deposits, FDs, provide fixed returns. Banks use your money to lend as loans, safe but limited growth. Stock market, two ways to invest. Directly, buying shares yourself, or indirectly, mutual funds and insurance. Higher potential returns but requires knowledge and patience. Mutual funds, a basket of security managed by professionals, diversified and less risky than direct stock investing. Intention is still to invest into the stock market but in a managed way. Real estate indirectly contribute to economic development, creates job and industries. Example, brick cement usually requires more money and is less liquid. All these options are available to retail investors, but the stock market directly or mutual funds is the primary way savings flow into businesses and back into the economy. Why we need a stock market? Okay, but why is the stock market so important? The stock market is a platform that channels the flow of capital from ordinary people to large enterprises. These enterprises then use this money to grow their businesses. And what happens when companies grow? They create more jobs. More jobs lead to more income for the working classes. More income means more spending, which grows the economy. More savings from increased income means more investment in the future. This creates a cycle of economic development. If our money were kept idle at home instead of invested, this entire cycle would break down. That's why a rubbish stock market is essential for any economy to do well. The continuous flow of money. Think of the stock market as a loop. Common people invest money in the share market. This money becomes capital for companies. Companies use this capital to grow, which creates jobs and income. People earn income, save and reinvest in the market again. This is a continuous flow of money from common people to companies and back to common people as returns on investment. That's why the stock market is not just a place for traders, it's the engine of the economy. We have companies to expand, innovate, and create jobs. Companies need fund. This is where the stock market comes in. The stock market acts as a bridge between savers and companies. Savers put their money into the market. Companies receive that money as capital. Companies grow, generate profits, and in returns, savers get returns on their investment. The entire process is regulated by SEBI, the Security and Exchange Board of India, which ensures that everything runs fairly and smoothly. So the stock market is not just about individual profit, it's a systematic regulated way to transfer capital from savers to companies, which fuels overall economic growth. SEBI's role. Now let's talk about SEBI's, the Security and Exchange Board of India. SEBI is often called the watchdog of the stock market. Its main role is to ensure safety for investors and fairness in the market. Here is how. Promotes the security market. SEBI works to develop and modernize the stock market system. Provides a platform for brokers, advisors, banks, and others to work transparently, prevents inside trading, stopping unfair practices, promotes investor education so people like you can invest wisely, ensure companies transparency, making sure companies share correct information, protects retail investors so small investors doesn't get exploited. In short, SCBI just is the regulate, monitor and protect so that investing is not a gamble but a fair and transparent process. That's why the stock market is described as a highly organized and controlled system. It is not about luck or chance, it's about long term growth. While many people expect huge returns in a short time, the reality is more practical. With patience and proper investing, one can earn consistent returns of 15 to 20% annually, a safe and realistic way to grow wealth. Final conclusion. So, to wrap up, the stock market is not just a place for trading shares, it's the engine of economic development. It gives savers the chance to grow their money, it gives companies the capital they need to expand, it creates jobs, boosts income, and strengthens the entire economy. And all of this is carefully regulated by SCBI to protect investors. The big lesson here is idle money loses value, but invested money builds value for you, for businesses, and for the nation. That's why the stock market is one of the strongest pillar of economic growth.